hopefully in the last lap of negotiations on tariffs. Firstly, let's talk about what you think is going to really come about from Trump and Putin's meeting in Alaska, because it seems like there could be some resolution to the war in Ukraine.
I just lost you there.
Can you hear me, Cameron?
I can hear you now.
Okay. I'm wondering about what really is going to come out from Trump and Putin's meeting in Alaska. And does it seem like they're heading in at least for any negotiation when it comes to, winding up of the war with Ukraine?
Well, I think the war's been going on so long and so much has been invested in it by multiple actors that to hope for a resolution that occurs in just a week or so is overly optimistic. But that said, I think there's definitely some fatigue on the Russian side, and Trump taking a stronger line might encourage them to look for a solution. In terms of market impact, however, from where we sit, which is, we watch a big universal mutual fund and ETF flows, geopolitics has really not been a meaningful, long-term driver of flows for quite some time. It'll sometimes move the needle week to week, but in part because of the enormous post-Great Financial Crisis liquidity we saw, investors have come very conditioned to seeing geopolitical events as providing a short dip that they should buy into. So I'm not going to predict any enormous shifts, even if we get the best case scenario next week.
Sure. So, Cameron, what is going to drive the movement of flows? And amidst all the tariff negotiations, are you already seeing money move out of the U.S.? And is that sum really getting deployed into other emerging markets? Or do you think people are still in just wait and watch mode?
More in wait and watch than redeploy. We are seeing, a little bit of money move out of the U.S. And we're certainly seeing fund managers who have the option of reducing their exposure to the U.S. And by this I'm talking about global equity funds with a truly global mandate. They have certainly been trimming their exposure without, a full-on rush to the exits. But we're not seeing, really significant outflows from U.S. funds. We've seen sort of a slow grind, a few billion here, a few billion there. And people are certainly on edge. But the moment there was some degree of clarity on certainly tariffs with the two key trading partners, which are the EU and Japan, there was sort of definitely a pickup in flows back into dedicated U.S. equity funds. I do think that the tariff uncertainty isn't helping, but as you mentioned before I joined you, U.S. markets continue to move higher, and the general market sense is that this too shall pass.
Right. Cameron, also help us understand a little bit more in terms of these fund flows that we've seen morning. While you say that the flows out of US have not been very significant, the flows into US also are not looking very attractive right now. But you have seen significant outflows from China, Taiwan, all of these markets. Help us understand where these fund flows are actually going and where does India stand amid all of this? Because we have also seen consistent FII selling in India.
Yeah, no. So to answer the first question, they've been going into liquidity funds recently. Last week, between them, U.S. and Europe money market funds absorbed $100 billion. So I think that at the moment is the main off-ramp for the money. In terms of the U.S. flows, 4, 5, 6 billion represents 0.01% of the total AUM of the U.S. equity funds that we track. So we are seeing a trend away from U.S. assets, but it's not a very strong one, certainly not yet. In terms of emerging markets, no, we're not seeing much of a rotation towards them. There was a little bit of a thaw coming into the third quarter, and there's been more interest on the emerging markets debt side than there has been on the emerging markets equity. Flows to dedicated India funds were recovering until the latest inflection point over higher tariffs because of India's consumption of Russian oil. I think in many ways what's worrying people more is the pharmaceutical tariffs. India obviously is a major provider of more affordable pharmaceuticals to the U.S. And people are sort of trying to make sense of what that might mean both for India and for sort of the U.S. and U.S. healthcare policy. So more uncertainty to navigate, but the uncertainty goes away. I think you'll see more money come back into the U.S. and India, which was doing quite well until this happened, will probably start to see things pick up as well.
All right. With this, we let you go on that, Cameron. Thank you so much for taking the time out and speaking with us and helping us with your perspective on the markets, as well as where do you see the money flowing right now. But back home, a lot of earnings that will be reacting to their numbers, as well as let's talk about that and start with Tata Motors then. And this time around, we have seen a mixed bag coming in from Tata Motors, though the JLR margins were the key to watch out for and a little better than expected.